what the concern amongst analysts and central bankers is that if people at any sight of uptick inflation, people then begin to think that future inflation is going to go up, that then leads to changes in consumer behaviour, which can then sort of create this self-fulfilling prophecy where inflation then stays higher for longer. Now, that has obviously has consequences for the Bank of England's approach to monetary policy, and it probably, if we get into that scenario where inflation expectations are high and spot inflation is also high, it's really tough for the Bank of England to cut interest rates in that environment.
Now, there's lots of concern, as you would imagine, about the impact of the Gulf War, the war in Iran, on the economy, on the world economy, and here, of course, on the British economy. Here is the economist Paul Johnson talking to our own Hugo Rifkind on Times Radio earlier.
I'm afraid there just is no doubt that this, if energy prices are up, the UK and other countries dependent on energy will just be worse off, at least for the period that they're higher. Now, let's hope that they come back down again. If they come down quickly, then not much damage done. But if they stay up for a significant period of time, then we can all look forward to another couple of slightly miserable years.
Right, it's the economist Paul Johnson there, joined now by Jack Barnett, the Times economics correspondent. Hello to you, Jack.
Afternoon, John.
Hi. If you'll forgive one of those questions to which the answer is time will tell, I mean, how seriously are we looking down the barrel of an economic downturn?
Yeah, I mean, the key variable in all of this is obviously Paul Johnson was sort of alluding to there earlier on the radio station, was that it's very uncertain how long this is going to last. It's very much up to President Trump and obviously Prime Minister Netanyahu in terms of how much damage they want to do to Iran. It's very difficult to actually judge what the war aims are. But for the economy and for financial markets, that is the key question: is how long does this go on for? And the main volatility that we've seen in the financial markets, and the main fallout from all this, is we've got this big congestion going around the Strait of Hormuz, which is a key waterway between Iran and Oman. It's effectively shut at the moment, so no oil is really passing through this shipping artery, which I think about a fifth of the world's oil supply passes through. And that's been the main determinant of this big upsurge in oil prices today. We saw the price of a barrel of oil nearly hit $130 today, which is pretty significant upturn. If that sort of sustains over quite some time, we are going to see some inflationary consequences for that in the UK, in Europe as well. I think the financial markets today have actually moved completely to now price out any interest rate cuts from the Bank of England this year. I think just 2 weeks ago they were pricing in nearly 3 quarter point cuts from the bank this year. That would have taken rates down to 3%. They're now actually envisioning potential rate increase before the end of the year, which obviously would exacerbate the inflationary hit to consumers and also the hit to the wider economy in terms of growth as well. So I think the main variable here is just how long does this war actually last?
Yes.
And I think the information you're getting from the Trump administration and also from the Israelis is it's very unclear what the war aims are, and then what are the actual thresholds that we can pass for them, which would then pull back some of the strikes on Iran.
Right, so 10 days, Jack, into this war, we have already seen, the biggest spike in oil and gas prices that we have seen for years. And there will be an effect from that. We can't know how much worse things are going to get, but there will be some effect from what we've seen so far. How serious will that be?
Well, we are already seeing it slightly. Consumers might have noticed the price of petrol creeping up a little bit in the last couple of days. I think the RAC put an estimate out over recently saying that the price of petrol was up about 3p, and that's obviously just off the back of 5 days of oil increase, and that doesn't take into account the enormous increase that we got today. I think if we're looking at the oil price now, it's come back a little bit from the big increase that we saw in trading overnight. It's trading at still about $100 a barrel, so down significantly from the big increase that we saw this morning. But even at $100 a barrel, that is gonna hit sort of the cost of everyday essentials. I think the key thing here, and what a lot of economists that I've read in my inbox, and a lot of analysts are saying, is that because consumers have been hit by so many shocks in such a quick succession. So, we had obviously the gas price increase in 2022 after the Russian invasion in Ukraine. There was the inflation upsurge after the reopening of the global economy following the pandemic. That has kind of recalibrated people's perceptions of inflation. People are much more susceptible to inflation now because they see it in the cost of everyday essentials. So you see it at the petrol station, you see it at the supermarket as well, because food prices increased quite a lot over the last couple of years. So what the concern amongst analysts and central bankers is that if people at any sight of uptick inflation, people then begin to think that future inflation is going to go up, that then leads to changes in consumer behaviour, which can then sort of create this self-fulfilling prophecy where inflation then stays higher for longer. Now, that obviously has consequences for the Bank of England's approach to monetary policy, and it probably, if we get into that scenario where inflation expectations are high and spot inflation is also high, it's really tough for the Bank of England to cut interest rates in that environment, and that is going to constrain the economy.
Yeah.
Whilst at the same time, it's also going to deliver a bit of a hit to the public finances. I mean, Rachel Reeves last week, I know she delivered her spring statement, and it was kind of, lots of people were saying that the forecasts weren't worth the paper they were written on because they were already out of date with the strikes in Iran. She was actually almost quite lucky that she delivered it last week rather than this week, because that would have potentially taken into account some of the increase in government bond yields that we've seen recently. I mean, the uptick in government bond yields over the last week has been comparable to the Liz Truss mini budget of 4 years ago, and that kind of gives you the sense of the scale of the impact that we've had in the financial markets over the past 10 days.
Yeah, so we are at the mercy of events yet to play out, and a continuing war, but also something of a game of chicken between the leaders in Washington and in Tehran. You've got the Iranian leaders hoping to survive. You've got Trump looking for a way to declare victory, and all the rest of us can do is watch and wait, and that includes the markets. And we're going to keep in touch with you, Jack, if that's okay with you, just to get some sense of what on earth it all means for our economy. Jack Barnett there, who is the Times economics correspondent. Now, coming up in a very short while, our political editor at Times Radio, Anna Mihailova, she has an exclusive story on